All right. So as I was just saying, bad news is that this is the last session. But the good news is we've got the best panel here. So they're going to, the pressure is on, guys. They're going to really try and give us some impetus for as we leave this event and take on the challenge which has been set for us for the next year of really kind of turning TradeTech into something of reality. So I'm Sean Doherty. I'm head of trade and investment at the World Economic Forum. And I have a fantastic set of panelists here with me this afternoon. So they are from going along. We have Mohammed Shanil Walikiyat, who's head of investments at Lulu Financial Holdings. We then have David Beer, who is the Chief Executive Officer of Trademark Africa. And next there, I have Sasha Haider, who is the Chief Strategy Officer of AstraTech. And at the end there, we have Bianca Liodari, who's the Vice President of Bain & Company. So thank you all very much for joining us. And as I say, your task is to really give us an energetic path forward coming out of today's discussions. And the way we're going to kick off is we're going to ask you to boast. So we'd really like to hear, what are some of your success stories in the area of TradeTech? Maybe I'll start with you, Mohammed. So tell us a little bit about, how Lulu Financial has been able to use technology innovation to get where you are today, and, if you've had any difficulties along the way.
Thank you for that. So Lulu Financial Holdings is a cross-border payments orchestrator. So we started in 2009 with our first customer engagement center. And today we span across 10 countries and we have around 370 customer engagement centers and moving more than $25 billion annually. I think from the beginning, we have been a technology-focused institution. We have been trying to solve the issues in cross-border payments by leveraging technology. And I think it all started from being an API-first organization. So even if we wanted to solve a problem internally or build a new functionality for a customer, we always went with creating an API first. So how did that help us? That helped us from being, a cross-border payments provider to being a platform, right? And in that journey to being a platform, we've been able to move away from just cross-border payments. We were able to introduce remittance as a service. We were able to look at earned wage access, micro-lending, banknotes as a service, and so on and so forth, right? And we've been able to implement robotic automation in our AML CFT processes. So how did that help us? It reduced, extra time, like 3 or 4 minutes that would take a human to solve a problem. It would take the system maybe a couple of seconds, right? Ultimately benefiting the customer, right? And I think that's really helped us. And being a platform, we've also been able to power some of the largest fintechs in the region, and, extending our payment capabilities to them.
Fantastic, thank you. So I definitely want to come back to you about that point around being API first and really being a platform and enabling collaboration, which I think is really what we want to get to with this work. But let me go to you, David. So you or Trademark Africa, you work across a whole bunch of African countries, helping them to implement new technologies into trade processes. So tell us a little bit about that. What are some of the top stories, the ones that you're most proud of, where you've been able to help?
Great, many thanks, Sean. So Trademark Africa, we are a not-for-profit trade facilitation organization. We've invested just over $1 billion in most of East Africa, but now across the continent as well. And we exist to take down the time and the cost of trading across borders, and then to help exporters benefit from that. We operate in about 20 countries across the continent at the moment. I've heard a lot of brilliant innovations today in a number of these sessions, in particular with a focus on the private sector. So let me just talk about how we can work with the public sector instead. There are some, when we think about the challenges, there are some subtle differences in how we have to approach the problem here. The first is around the institutional complexity of working with public sector. You often have to work with a range of different institutions, organizations, and especially in trade, between different governments as well, which changes many of the incentives and introduces a number of layers as well and those layers produce their own vested interests, whether that is that people are profiting from a certain way of working, or that they simply can't see what the future looks like. You also have a huge number of gatekeepers. So you have at every level a number of people who can say yes or can say no to a particular challenge. So when we're introducing tech solutions for trade, it's not just about having the right idea, it's about how we do it. And there are almost two ways not to do this. The first is to jump in big, to fail, and then you lose your audience, you lose the buy-in, and you cannot go again. It's unlike in a startup where you can fail and you can learn and you can keep going. Once you've lost that buy-in from your institutional stakeholders, it's gone forever. The second is incrementalism. So if you try to do things bit by bit, you have to keep generating that buy-in to keep bringing the stakeholders on board, and eventually it becomes unsustainable. So let me talk about one example. We've put in place a regional electronic cargo tracking system across East Africa. So the problem we were trying to solve was one of smuggling and one of dumping. So importers, they'll bring in goods, they'll misreport, and then those goods will find their way outside of the official system into the shops. So we worked especially with Kenya Revenue Authority and other authorities around the region to say, how do we solve this? So we put in place seals on every single container coming into East Africa through Mombasa Port. And then those goods would make their way into the interior via rail or via road. So we can track, the aim was to track where everything was coming in and how it was being treated from a customs perspective. What we did was we decided to take a pilot so that we could test our approaches, we could learn from our mistakes, and we could demonstrate value in particular, both to the government and to the private sector. And we worked with the Kenya government on this. And then once we'd managed to learn those lessons, we went in for a big bang. We bought 20,000 seals. We said, right, we're going to work with Uganda, Kenya, Rwanda, Burundi, all the governments along this northern corridor from Mombasa through Kampala into Kigali, and we'll put it all in place at once. The result of that, we've seen a reduction in the transit time for imports and exports along that corridor by 45%. We've seen in the internal container depot in Nairobi, the time it takes to get your container out has reduced from 12 days to 4. So every importer is now saving 8 days on their container. These are huge gains for margins. They're huge gains for governments as well because revenues are going up. But if I can just make a second point, this is also about people and it's about institutions. Often we talk about technical solutions as the silver bullet. They are very necessary, but they are not sufficient. So we spend a lot of time working with institutions, working on digital upskilling, working on the buy-in to those solutions to explain what we're trying to do and to how, and to bring people along with us. That's a central component of having the impact that we need to have. Last year, we've been training 4,000 customs officials across East Africa on anything from digitizing customs valuation to introducing a new app for simplified trading regimes for those at the bottom end of the pyramid. We find once we have that community of practice, we can start to achieve far, far more. Thanks.
Great, thanks, David. And I love that insight that failing early and failing often isn't always the best strategy. Sometimes you need to be a little bit more thoughtful about that. Okay, Sasha, going to come to you. So you're Chief Strategy Officer of TradeTech, which I think does some very interesting things on cross-border payment, cross-border international financial services. Can you tell us a little bit about how you use technology really to try and optimize cross-border business opportunities, both for larger and smaller actors?
Yeah, I mean, can you guys hear me? That's a great question. So I think for a lot of people who don't know, TradeTech is the holding company that owns Botim, which is an app that a lot of you are probably quite familiar with. I think what a lot of people are not familiar with is that we have two very large fintechs that sit under our umbrella that are enabled through the Botim app as well. So PayBuy, which is a payments infrastructure player, which also has remittances, and then Quantix, which is our lending platform that has a substantial unsecured lending loan business here in the market. And what's been fascinating for me, at least to understand during my time at Astra, is we have 150 million unique registered users on our platform, which when you think about the UAE as having 10 million people within it, and within the UAE we have 8.2 million registered users, which is the entire adult population, is just a kind of insane platform for growth. Primarily our offering now is consumer focused, and we've seen, I think since Jan to March, around 500,000 remittances across our platform. And I think sort of the way we're thinking about it and our strategic vision going forward is how do we enable the rails that we built into important regional corridors like UAE, India, UAE, Pakistan, Bangladesh, the Philippines, some North African countries as well, as sort of a platform for business, right? So ideally first sort of like SME payments, cross-border payments, and then eventually also like lending within those markets. What does that look like, leveraging the platform that we've built so far? Specifically, I think that in the wake of the conversations that we're hearing right now around sort of tariffs and then sort of like unilateral trade agreements, and then also like what it means for MSMEs within the markets that we operate in, I think that there's a really interesting story or platform that we've built that can kind of become the rails for business activity amongst smaller merchants within our corridors who perhaps now might be a bit stifled by some of the wider global implications of the tariff regime that's been imposed by the US. And so I think that a lot of people have seen that as perhaps, a little bit frustrating, but I think we see an opportunity that's arisen out of that as well. So I think broadly, like we've built these very, very interesting consumer rails, and now we're trying to figure out how we enable a business value proposition over that for small to medium enterprises across the region.
Great, thanks, Sasha. So I think we've seen some commonality here about how much thought goes into getting those rails right. So now turn to Bianca. So Bianca, in your role, you look across a whole bunch of different businesses, and you must have some fantastic examples of where you've seen the integration of technology work very well and really help a business get to the next level, and also probably where it hasn't worked. What are some of the stories you'd like to share?
Absolutely. So indeed, we work a lot with the clients from across different geographies and industries in the journey of technological adoption, technological change, and we see technology and specifically AI, Gen AI these days having a huge impact on multiple sectors and specifically on trade as well. So maybe just to give some examples of the type of work that we do with the clients, for instance, in the financial services space, which is where I'm focusing. So for example, trade finance solution, there is a huge impact from Gen AI solutions, but also from distributed ledger technology, as many of you in the room will be familiar with. This impact has been there for the past few years, but we see a very strong acceleration lately, powered by the latest developments and models that are available today. So for example, AI and Gen AI in trade finance can do basic things such as helping you process a large unstructured amount of data, to process, to extract, to pre-populate contracts, but also navigate regulatory complexities across geographies and compile or create documentation that is compliant with the different geographies and requirements, fraud detection, fake detection, all these kind of things, and also virtual assistant, conversational type of assistant that help the trade finance operators to be faster and more effective with the client's request. So that's the kind of AI and Gen AI type of use cases that we see gaining traction. And then you have the distributed ledger technology. So as I guess many of you will be aware, large banks such as the HSBCs of the world, the Standard Chartered, BNP Paribas, etc., they've all been working on implementing some kind of DLT type solution to do, for example, fully digital letters of credit, completely streamlining the process, going from a turnaround time of like 10 days to 24 hours. So we've seen that happen in concrete application of this use case. Some of the examples are, for example, the Contour distributed ledger platform built in Singapore by various banks, including HSBC, Standard Chartered, etc., Comgo, and others. So all of these solutions are really helping revolutionizing the experience and actually democratizing more and more the access to trade finance solutions for MSME. Of course, there are also, as you were saying, Sean, some kind of difficulties or barrier to adoption. It takes time because the digital maturity is not always there, both from the financial services institution side, but also from the user side. So the lack of interoperability, the lack of maturity, it requires a lot of kind of installation, change management. But I would say in general, it's a journey that has very promising future from what we can see.
Excellent. Thank you, Bianca. And, how's that for just-in-time delivery? We have fifth panelist arrived just in time for the question which was going to go to him. No doubt you've been using TradeTech to make sure that you came here right on time. So pleased to welcome Mahmoud Moidin, who is a UN Special Envoy and formerly the Minister of Investment of Egypt. So Mahmoud, we've been talking about kind of success stories in TradeTech and what you want to boast about. And I think, in your role, you're trying to look at, how can we help sustainable development, recognizing that there are financing gaps and looking at, have you been able to use emerging technology to try and bridge and overcome some of those gaps? Any stories you'd like to share with us around where this has worked well?
Yeah, this is better. Thank you so much, and apologies. I couldn't be here on time to listen to the previous speakers, but I tried my best. These days, your best sometimes not enough. On the digitalization, getting the SDGs back on track, the discussion that we had back in September, which seems now as if it's ages ago, given the many changes that happened since. So when it comes to areas related to digital transformation and acceleration of activities to achieve the SDGs, are lots of good ideas, but they lack conventional infrastructure, including electricity. They lack as well adequate new infrastructure, including what we need to have of dependable database for your country, legal frameworks, and there is a list of what's called the Readiness Index, which had been articulated by my former employer, the International Monetary Fund, and there is something similar, could be better, by Stanford University, in which it tells you where exactly your country in the global readiness map. And it follows a kind of a common sense approach of having human capital, infrastructure, ethical framework, legal framework, and of course, whatever is needed to enhance your opportunities to optimize AI. Unfortunately, in the whole of the Middle East and Arab countries, is only 6 countries appear as with good potential in the region. UAE is one of them, Saudi Arabia is another, there is another GCC countries, Morocco, question marks are there as well, with positive signals in countries like Jordan and Egypt. So there is a lot to be done in order to invest in the human capital, invest in the infrastructure, including digital infrastructure, and to make the whole system resilient as well against shocks. So there are 2 ways here in order to achieve SDGs. One is basically focusing on finance, but finance itself can benefit from some transformation, including from the digital networks, from disrupting the system, from using some sort of good means as well of financial inclusion in order to have opportunities for sustainable finance. There is as well what we can really consider as dealing with the possibilities of disruption, and we're seeing a lot of them here. When the managing director of the IMF was here, she mentioned in order to navigate all of that, there are 3 Ds. One of them is the digital transformation and what it requires. The second one is diversification, that, well, even if you are focusing on these new technologies, you need to have backup plans and you need to have some investments in sectors that can save you in under shocks. And the third is basically about the deregulation or softening the regulatory environment and leveling the playing field. I would add as well, benefiting from some discussion that we had here during the last 2 days, issues related to data, which is the 4th D that you need to put into consideration. That's never been taken seriously in many countries in terms of production, in terms of securities, and in terms as well of dispersing what you have of data. And the fifth one, which has been taken unfortunately as given, but this is the main thing. It's demography and the demographic structure that you need really to deal with. If you are in an aging society or societies like in Europe, the kind of investment that you need to have and the kind of training that you need to have is very different from young populations of Africa or something in between in the Middle East. So putting the demography and the demographic structure and composition in the center is useful. We have seen some good examples, just to give you a couple of good hints of what we see working nicely well, either in smaller economies like Singapore, a great model, and is actually top in the two indices of Stanford and the IMF in terms of readiness. The second one had invested a lot in the three dimensions that I mentioned, human capital, resilience, and digital transformation, is Korea. Other countries as well that had managed to do well despite the big challenges related to population and population growth is India, with its 1.4 billion people. But again, the issues about having the IDs, the methods related to getting everybody included under a financial inclusion framework, it gives people really hope. It's not just about smaller countries like Singapore can do it, but even bigger ones, but with good political will, you can have some sort of good developments.
Perfect. Thank you. And I think very important message about tailoring to the population, your customers essentially. So look, these have all been great examples, but I think the one thing which we've heard again and again and again today is that collaboration is essential. So I think that's what we want to dig into a little bit in a next round of questions. So I'll come back to you, Mohammed. I mean, you were talking about being API first, but can you go a little bit deeper into that and give us some examples of partnerships that have been able to enable this kind of collaboration across the digital financial ecosystem? Because just having your own API-ready solution is not enough, right? You need to work with others. So tell us a little bit about that.
Sure. So I think collaboration gives you market access and scale, right? And I think as a remittance solutions provider, we are specialized in that, right? And with specialization, what does that give us, right? We are spending day in, day out, focusing on how do we improve our FX, how do we improve our AML CFT processes and our procedures, right? And how do we overall improve our rails for terminating remittances across the key inward remittance countries, right? And we see partnerships as an enabler, right? So like I said, our remittance as a service platform, right, is powering a lot of the major fintechs in the region. And while for them remittance is just an add-on service, they get to just they leave that remittance part to us, and we take care of all the mundane activities like managing the treasury and so on and so forth, and they just inherently focus on the consumer experience and try to retain that customer. So I think there is a lot of room for collaboration in this space.
Fantastic. I mean, maybe let's follow up directly on that. We're going to skip over David and go straight to you, Sasha, because work in a somewhat similar space, and maybe this is a good example of how different businesses can work together. Can you tell us a little bit about your approach to kind of building and working with different technology ecosystems?
I love that question because one of the terms our team loves right now is co-opetition, which is a combination of competition and cooperation. I think that the way we look at it is that we have such a vast user base and that we are in so many markets already that it would be virtually impossible for us to go into every single one of those markets, secure the right regulatory approvals that we need, build the tech to serve that market as per its requirements and as per the demographic needs. That we've definitely taken the approach where we're looking to partner and offer so we have significant regulatory cover within this market. We have our SVF license, our retail payment services license, and a full-fledged FinCo lending license, which essentially makes us a full-fledged fintech, perhaps with the ability to take deposits. And I know that is a suite of license that is quite envied by some of our peers, but it's an interesting launch pad and platform for international players who are perhaps trying to enter the UAE and have access to. Another very interesting fact about our platform is a lot of the customers on our platform right now are interacting with financial services for the first time. So it's a lot of underserved people who perhaps wouldn't have historically had access to a bank account. So this combination of sort of a platform of previously underserved customers, and then also this sort of full suite of licensing, as well as, you know, a significant securitization of $500 million, which we secured from Citi last year, provides balance sheet. And that kind of, we see ourselves as not able to sort of, I guess, like use all of that by ourselves, and would be very happy to have international players come and leverage off our platform to enter the market. Equally, when we think about the fact that somebody using Botim in Egypt, and it's interesting because obviously, as you know, a VoIP that's quite widely used within the country, a lot of people then tell their family members elsewhere, whether it's Egypt, India, Pakistan, to download the app. We have already a set of users who are already leveraging that platform. I think what we're thinking about in the next stage of growth for ourselves is, who do we partner with on the ground within those countries, from like, you know, a regulatory fintech perspective or otherwise, to sort of extract as much value and you know, sort of leverage the data that we're collecting on the corridors that we've built so far. So an example of that could be, for example, if we have, you know, clear remittance data into Egypt between, you know, a family in you know, a breadwinner based in the UAE who's sending money back to their family in Egypt, what do we know about where they're spending that money in country, right? And like, how can we perhaps create a closed loop system whereby we get a little bit more data on the household spend and consumption there, and then can layer financial products on top of that, right? And then automatically you're facilitating through partnership, because again, we're not trying to go to the central bank in every single country that we partner with and try and get licensing by ourselves, but at least try to understand how can we build financial services that can serve a family or a business that is, you know, split across multiple geographies, right? And like I said, we already have like a very interesting foundation for that, but I think definitely like our strategy to go forward and capture as much value is founded in how we facilitate and partner on the ground with sort of, you know, whether it's through JVs, partnerships, and then perhaps eventually acquisition down the line, whatever that might look like, just like how we work with players who are like well enabled.
Fascinating. Thank you. You know, very interesting how you use data to really help you with those decisions. So maybe carrying on to you, Bianca. I mean, I understand you've been helping companies to work together, in some cases almost sort of forcing them to work together, you know, when you're working on a merger activity. Tell us a little bit about that. You know, how does technology play out in those sorts of situations where there's a sort of a forced collaboration almost?
Yes, absolutely. I would open with a statement that because change is difficult, collaboration is a key ingredient to make it happen in a way. And maybe instead of focusing on mergers, because mergers, of course, is a very specific situation, it's kind of one-off, etc. But for example, we're working a lot on helping large institutions change and transform. I do a lot of work in banking specifically, in financial institutions and trade finance specifically. So one approach that works well is basically the two-speed approach. So you have the big ship, the like mothership, Titanic, legacy bank, legacy institution that you're working with. You need to work on that. You need to modernize the tech system of this bank. That takes time. You need to digitalize the customer journeys, for example, of the services that are offered to the trade finance customers. You need to do that. It's a work that has to happen. But in parallel to that, you take a speedboat. So you spin off a specific segment of customers or products or solution. And on that specific perimeter, you collaborate, for example, with an outside specialist, an AI firm, or someone else, basically an external actor that can inject that native AI and that change mindset into the offering of the bank and can accelerate a lot the transformation, which otherwise would take forever if you were to do it at the rhythm of the traditional kind of banking ways of working. So for example, right now we're working on a bunch of opportunities where, for instance, banks would look at carving out or spinning off a specific part of their services, or for example, even part of their back office, power it with some latest generation solutions from AI specialized players, and spin it off into a revenue generating business to offer those services in a much more efficient way and to make it into a revenue generating thing instead of a cost and an operation type of thing. So I think as we think about change and kind of collaboration, the impact of collaboration on change and technology adoption, we see this kind of dual approach, which works quite well to accelerate a little bit the transformation.
Great, thank you. And David, coming back to you, I mean, you're in some ways in a similar business, and you're trying to help institutions, in this case governments, to sort of change. And you're relatively new in Trademark Africa. You've been there a year or two, but have you come in with a vision of, how do you want to make sure that technology is kind of central to that change in African governments and how they deal with trade processes?
Yeah, absolutely. And I think a lot of this is about trying to identify those opportunities and then look at the win-win collaborations. And I think in a sense, it's I listen to colleagues here, and it's a bit easier for us because there is less competition because we're serving both the private sector and the public sector. But can I go back to one of the previous sessions, in fact, the one that took place just before this, and panelists kept asking the question, can you really trust the data? And we've been trying to think through that for a number of years and come up with collaborative solutions that work for all of the stakeholders, but also trying to look at some of the future tech that we can use. Bianca talked about DLT. We've been working with the Kenyan government and IOTA Foundation for several years now on a trade logistics platform that will bring all of the data together that we need in a way that is critically non-falsifiable. Now, in one sense, this is not rocket science. It's not particularly new. We've seen people try to do this before, but the difference is that instead of taking a private sector approach that is proprietorial, we're trying to say, let's take a collaborative approach that is going to provide a platform that is neutral, that is independent, that is not for profit, so that it can be useful for the maximum amount of people possible and have the biggest public good. We've seen the impact of this already in Kenya. We've seen the trade transaction costs come down by 80%, profitability of those transactions go up by 30%, and now we're starting to ask the question, how can we make this scalable? How can we offer this to as many people as possible globally? We've been working together, in fact, with World Economic Forum, with Tony Blair Foundation, the UK's Chartered Institute of Exports, to set up a foundation in Switzerland that can govern this technology and make it available for other people, both to adapt from a tech perspective, but also to use from a trade user perspective. If I'm a revenue authority, if I'm a freight forwarder or an exporter, I can choose to use this on particular trade channels. So we really think that taking this sort of collaborative approach can have a massive impact, and can also, all we're looking for is to recover costs, but can be viable as well from that perspective. We're quite excited about some of the possibilities.
Fantastic, thank you. And I think that fresh thinking you're bringing is really motivating. So I'm going to come back to you, Mahmoud. You were talking earlier about, kind of really tailoring solutions to the local market. Can you just tell us a little bit more about that, about how you can make sure that you have strategies which are appropriate for very small companies or for countries which maybe have limited technological infrastructure?
Right. There is a long answer, which is reflected in a book that is going to be shared soon, published by Palgrave, called AI-Powered Business and Sustainability. But I'll give you the short answer now. So it first starts with the gaps that we see. Some of these gaps could be seen as government responsibility, and some of these gaps could be considered as corporate responsibility to deal with. But in practice, you will not really find any of these gaps, and that could be a small or quick challenge if any of these gaps could be bridged by the public alone or by the private sector alone. So as identified in these indices, we have an infrastructure gap that includes basic infrastructure and digital infrastructure. The second one is basic about skills and education. If you are going to be tasking government to get the upskilling needed without really knowledge of the market needs and the sophistication on the advances of technology that is not really done through the bureaucracies, we are going to be wasting time and resources. So partnership here would be useful. And then you have issues related to data colonialism and the tech monopolies. If you leave it to private market dynamics alone, this will be more of it in the dominance of some of the big giants, and you are going to be losing opportunities of fairness and effectiveness of markets. And then the very final one is basic about governance and policies. I worked in government for 15 years and with the private sector for another 15 years. And I can see here that each one of them have a better approach. Leave it to market and private sector will solve issues of governance based on the market dynamics. Government will be with rule-based, but sometimes with draconian approaches. So I think here the partnership would be very much required. But both areas, quoting my good friend Marc-André Blanchard, used to be the PR of Canada, he said, well, our business today, we need to be, PR means permanent representative to the UN. He means that we need today bilingual. Comes naturally from a Canadian, but basically bilingual, he means that you need to have the basic minimum of knowledge of how government functions and how the private sector functions. You need to bridge the gaps of language here. So areas related to capacity building on partnership is emphasized, policy and regulatory frameworks, and here there are good models that you can build on, including the EU model and the OECD principles. There are some areas as well about leveraging global cooperation. That was prepared like 2 weeks ago. But now I would take really the issues about global cooperation with some sort of consideration of the kind of dynamics that we have today. You don't need to get it for granted, but definitely you need to pick and choose who will be your reliable partner, not in a transaction, but this is a kind of a long-term journey. Then investing in the last mile, which is basically about the importance of localized kind of contribution and impact. In some of our approaches, sometimes we say, well, let's do it at the top, and then there will be some sort of cascading and trickling down effect. Some of the best solutions we have seen, especially with better access to internet, with advances in technology, that some of the best solutions could be localized at the beginning with possibilities of scaling up. And then finally, it's basically about areas of how to harness public and private partnerships. It's easier said than done, but we have seen some better successful models that we can really follow up and scale them up better.
Great, thank you, Mahmoud. Well, you've given us some warnings, some opportunities. I'm afraid we're just about out of time, so we have 30 seconds each. So I'm going to just come back along the panel and ask you really 20, 30 seconds, what most excites you about TradeTech or scares you? Mahmoud, final thoughts?
Well, it's the ethical dimensions of it and possible abuse and the exaggeration of the ethical aspects to the extent that you can deny people the opportunities of AI and advanced technologies and fintech out of fear. So we need really to have adequate understanding of what could really be at risk and how can we harness it and get people up to speed with these changes.
Great, thank you. Bianca.
Yes, so we are very excited. In times of disruption, it's a time of opportunities and change, and so we're very excited actually of the current environment. We ran recently a survey of heads of procurement and finance in a bunch of corporations globally, and everybody is in the process of thinking how to diversify, delocalize their supply chain, or adjust their pricing, or reshore, nearshore some of the production. So I'm very excited thinking about all the kind of adjustments that we can help and change that we can help adopt the companies in this time of disruption, specifically using some of these latest technologies such as AI to help decision making, to do scenario analysis, dynamic pricing adjustment, build flexibility in the supply chain, which is a supply chain that was built for a world that doesn't exist anymore and now is dead. And this is a great opportunity for us to really rethink and build some muscles that enable companies to adjust to these turbulent times. That's it.
Thank you. Sasha.
I think for us, it's primarily like the power of like embedded fintech and AI and sort of the underserved population that we haven't historically had much data on, and sort of having access to that and what that sort of means for cross-border, especially across the global south. So that's definitely something that's exciting for us.
Brilliant. David?
So we're definitely far more excited than scared. I think one exciting thing from our perspective on the continent of Africa is the concept of smart corridors, where we can start to pull together a lot of these different ideas. A lot of the AI, for us, that's around enhanced risk management for customs authorities, customs data exchange, logistics platforms that we're talking about, electronic cargo tracking, even smart gates of borders. You pull all of that together and you start to have a major beneficial cumulative impact on reducing cost and time of trading, reducing trade barriers, and therefore driving up exports. I think it's we often talk about, or these days we're talking about win-lose trade dynamics, there's a huge amount of win-win here in the TradeTech space.
Noted. And Mohammed, final
I
thoughts?
think what excites us the most is that the fintech evolution that's actually occurring here in the GCC. We think there's a lot of opportunities surrounding that, and just being in the cross-border space, I think JP Morgan has projected that remittances are supposed to be growing 5% year on year until 2027. So we see a lot of opportunities in that space.
Well, you've been a fantastic panel. I would invite you to bask in your glory for just a couple minutes more. I'm going to ask two more speakers to come up for some closing perspectives, and then we will finish off the TradeTech Forum. So briefly, I'm going to ask Marco Forgione, who's the Director General of the Institute of Export and International Trade, to share with us just a few independent perspectives on today. I have no idea what he's going to say, but he's going to cover the good, the bad, the ugly of TradeTech, and then afterwards we're going to have closing remarks from our host. But Marco, please.
Does this work?
Oh, there we go. Sean, don't worry, because you're not the only one who doesn't know what I'm about to say. Folks, Marco Forgione, I'm Director General of the Chartered Institute of Export and International Trade. And I'd like to start by congratulating and thanking Abu Dhabi, the UAE, and the World Economic Forum for convening such a fantastic group of people to engage in really progressive thinking around what the new world and the new trade structures and new trade systems are going to be. Look, a bubble has burst. As has just been said, we are not going back to what was before. We can't hope or think that in 4 years' time things will be different. They will be different, but they will continue to be different. And at the very forefront of that is the digitalization of trade and the opportunities and potential that that has to open up global international trade to all corners, to every entrepreneur, to every community, to every nation. This is a huge, optimistic time for those involved in international trade. We shouldn't be scared of uncertainty. Uncertainty is the new certainty. So we need to think now of how we engage with this program, and listening to the panels that we've had today, the conversations that have taken place, I feel inspired that we stand on the cusp of a truly transformational time. And it is this area, it is Abu Dhabi, Dubai, the UAE, who are at the very forefront of delivering on that potential. The regulatory sandbox that has been created here is really providing a great opportunity for government authorities, for policymakers, for regulators, and for business and entrepreneurs to come together to help define the way in which digitalization of trade can transform our supply chains. And just as a note, I'm a bit of a pedant when it comes to language. It never was and never has been a supply chain. That implies a progressive step, 1 to 2 to 3 to 4. That isn't what exists. It is a supply network, it is a supply web, and it is hugely complex. And what digitalization gives us is visibility, transparency through that supply web, that supply network. And that's good for policymakers, that's good for regulators, it's good for consumers, and it's good for manufacturers, entrepreneurs, and the whole, all the actors involved in that global supply web. But folks, there's a huge amount that needs to happen. If we are to realize the potential of digitalization of trade, there is a huge amount that has to happen. But it can only be done in collaboration, which is why today is so important. It is bringing together policymakers, government agencies, with entrepreneurs, with those advisors to business, to the supply chain, to really, really consider how we turn hope and optimism into reality. And bear in mind, we are all here on a mission. And the mission is to grow global cross-border trade. Because all the research shows and evidence proves businesses which trade internationally are more sustainable, more resilient, they employ more people, and they are more profitable. In order to address the most significant challenges that humanity faces, whether that's health inequality, educational exclusion, economic development, climate change. The only way we address those challenges is by taking down barriers and not building them up. And folks, that is the mission we are on. That is the mission which unites us. And this conversation, this forum today, is an important marker on that transformation journey. Folks, thank you very much.
Thank you, Marco. And if 10% of your enthusiasm rubs off on the rest of us, then this event will have been a resounding success. With that, I would like to thank our host, His Excellency Rashid Al-Blushi, Under Secretary of the Abu Dhabi Department of Economic Development, and invite you to deliver closing remarks.
Bismillah ar-Rahman ar-Rahim. We are toward the end of our very successful event, which is the 25th edition of the TradeTech Forum here in Abu Dhabi. It's been a very privilege to see such a diversified, experienced delegations, expertise, governments, and private sectors sitting in the last 2 days discussing issues related to the trade and the technology that would support the trade further. As we talk today, we are seeing a lot of challenges. And these challenges, as we have heard all day long in the last 2 days, come from geopolitical issues, natural crises, and sometimes even the different changing of the attention worldwide. And alternatives, solutions were discussed. One of the repeated solutions is the technology. Today we are in an era where we see a very strong infrastructure could support the database. And this database could be converted into a very valuable resources. And we could add into it AI as well as the blockchain. AI would help us to take the right decisions at the right time with the efficiencies of time. Blockchain would help us to have a very transparent and trusted information. Abu Dhabi, we are very much committed to the technology. Maybe you have heard recently that in Abu Dhabi we have investing, we are thinking to invest, or we are investing 13 billion dirhams in integrated artificial intelligence. And this investment will be till 2027. Why are we doing that? We think this technology would help us to create a cloud computing, and the transactions that will take place would be about 11 million digital transactions daily between the government, citizens, people who are living around us, and the businessmen. That shows how much we are committed in Abu Dhabi toward the technology. We really appreciate you are being here, and we have a very strong commitment to continue further developing ourselves. Challenges comes, as mentioned earlier. Once you see challenges, you see opportunities. Like us in Abu Dhabi, we would like everybody to take advantage of this opportunity and wish us all a best luck. Hopefully we'll see you, inshallah, next year with different challenges, with more advanced technology, and with happier face that we share with each other. Thank you very much.